you think that the Ethereum network or market cap is going to flip with Bitcoin. We have in 2030 a forecast of the entire crypto asset ecosystem. We expect to hit $25 trillion in 2030. The vast majority of that in Bitcoin. I'd love to hear your thoughts on why ETH or the ecosystem will surpass Bitcoin.
Okay, gold is 5% of all available assets. Dollar dominance is going to be the opportunity of Ethereum. In that world, we believe Ethereum could flip Bitcoin.
According to ARK Invest's latest projections, the entire crypto asset ecosystem could grow to $25 trillion by 2030. The majority of that, she explains, is still expected to come from Bitcoin because it represents something truly unique, a rules-based, global monetary system independent of governments or central banks, something the world hasn't had since the U.S. left the gold exchange standard in 1971. ARK's research sees Bitcoin's fair value potentially reaching $1.5 to $2.1 million per coin, depending on adoption rates and institutional demand. But Tom Lee steps in to expand that narrative. Because while Bitcoin is digital gold, a pristine store of value, Ethereum, he argues, might become the digital Wall Street.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
One of the things you've been saying is you think that the Ethereum network or market cap is going to flip with Bitcoin. Now, Bitcoin is at about, 2.4 trillion now, somewhere around there. And Ethereum is 540 billion. You think there is a flippening, as they might say. I'd love to hear you talk about it, but just to set this up, anyone who's listening to this podcast knows that we have in 2030 a forecast of the entire crypto asset ecosystem. And of course, we're going to be modifying this with time. We're doing our big ideas work now, but as of our last go at this, the ecosystem, we expect to hit $25 trillion in 2030. The vast majority of that in Bitcoin, mostly because we look at Bitcoin as, a global monetary system, rules-based that we've been missing since the U.S. went off the gold exchange standard in 1971. That's a very big idea. It's a technology, obviously, and it is the first of its kind. And we wrote a paper in 2016 on this, first of its kind in a new asset class. So those are three very big ideas. I'd love to hear your thoughts on why ETH or the ecosystem will surpass Bitcoin.
Okay. Well, if I could rewind a little bit to 1971, in our chairman's message last month, we addressed how gold versus Wall Street grew post 1971. So 1971 was when Nixon formally withdrew the U.S. from the gold standard. The immediate beneficiary was there was demand and a market to own gold. And so people would say that was your, first implication. But what we wrote about and talked about in our message was that in 1971, the dollar became fully synthetic because it was no longer backed by anything. And so there was risk that the world would go off the dollar standard. So in stepped Wall Street to create products to propagate the future of Wall Street, including, and we listed, I think, 14 products that emerged over the next decade, from money market funds to credit to mortgage-backed securities to futures, etc. And dollar dominance by the end of that period went from 27% of GDP terms but to 57% of central bank reserves and 80% of financial transaction quotes. So Wall Street was created products that made the dollar dominant, and the market cap of equities today is 40 trillion compared to 2 trillion for gold. So in other words, gold is 5% of all available assets. And so in 2025, we think everything is now becoming synthetic or tokenized, sorry, not synthetic. So as we move not just dollars onto the blockchain, which is stable coins, but we'll move stocks and real estate, dollar dominance is going to be the opportunity of Ethereum. So digital gold is Bitcoin. And so in that world, we believe Ethereum could flip Bitcoin, similar to how Wall Street and equities flipped gold post 71. Now, that is just our working theory because I am still a Bitcoin bull. So I'm very bullish on Bitcoin. And I believe your targets for Bitcoin are actually reachable. So we think Bitcoin fair value should at least be 1.5 to 2.1 million, but we can see higher values. But that would, of course, provide upside to a neutral smart contract platform where a lot of Wall Street will innovate of real world assets.
One of the thoughts here is, Ethereum went from proof of work to proof of stake. Now, in the next 5 years, we just think about all of the creativity that is going to evolve in the financial markets around Ethereum. We totally agree with you on that. But there will come a time where we're in some kind of crisis, and then we see the benefits of proof of work relative to proof of stake, because you're bringing in, as you say, you are bringing in a lot of TradFi and a TradFi thinking into the Ethereum world. So just wondering, if a crisis will be a moment of self-reflection and all right, is there a real difference between this proof of work world and this proof of stake world?
Yes, there is existential questions that'll emerge on proof of stake, but it's also, I think, going to happen with proof of work, because we know Bitcoin mining, for instance, is becoming concentrated in corporate. In fact, I think this year there was one mining operation that actually had won 6 successive block rewards, which is a high level of concentration. And as you know, as we get closer to 2140, the block reward is going to be so small that it may not provide the economic incentives to actually continue mining, which would represent greater concentration. So I don't know if at that point Bitcoin miners start to wrap Bitcoin to generate yield or other innovations. But proof of stake, you're right, is, because staking is an operational activity in security, if you have people reduce their staking, you weaken the security of the network. I think that's where the DATs are actually helping provide permanent capital. Because collectively, we are more than 3.5% of network. But SharpLink and BitMine both want to get 5% of Ethereum. That's 10% held, and a few others. So if you end up with 15 to 20% permanently staked, that is going to provide, I think, a high level of security, because we will get slashed otherwise if we're not meeting our requirement. I believe MicroStrategy will be one of the largest companies in America because of its Bitcoin holdings. So it's about 100 billion market cap today, 15 billion of debt, so 115. If Bitcoin goes to 2 million, then that's going to be a $2 trillion company. And it's because of its holding of Bitcoin, no different than an oil company. I think Ethereum can reach 60,000 per token in that world. And that would proportionally benefit the DATs, because Ethereum's around 4,500 today. So a 15 times increase plus the NAV expansion. So there would be a lot of upside in the existing Ethereum treasury stocks in that world, and many would become multiple hundreds of billions of dollars of market cap.
Cathie brings up one of the biggest concerns surrounding Ethereum. Layer 2 networks like Arbitrum, Optimism, and Base are capturing much of the transaction activity and fees that once flowed directly to Ethereum's main chain. So does that hurt Ethereum's value proposition? Tom says no. Ethereum should be viewed as the monetary base, the reserve layer for the entire decentralized ecosystem. Even if Layer 2s collect transaction fees, the value still accrues to Ethereum, just as the US dollar gains strength because global assets are priced in it.
And getting more people thinking about it, just thinking about it, that's all we need, would be a boon for efficiency of the market. The markets are highly inefficient right now, highly inefficient.
Yeah.
Yeah.
It's basically, I 100% agree, because today the equilibrium of stock price is like, we have to take everything that you guys just said and put it into a single unit of a price. But in a tokenized world, there's equilibrium for different components, and 100%. I mean, like a Tesla, an N equal 1 company, it's very difficult for the markets to price equilibrium because Elon Musk is changing dynamically the future, but we're now having to price it in and based on deliveries of units sold last quarter.
Well, and it's also time horizon as well. Yeah. Right now, the collapse in the time horizons to 1 quarter, if that, certainly in 22 and just generally because of benchmark sensitivity has really, I think, hurt capital allocation in a big way.
Yes.
And could hurt us competitively as a nation, especially now that China is, they're not hostage to the same kinds of constraints. So, yeah, this could be amazing.
Yeah, I would love to see the U.S. embrace this idea.
Can I just ask a question that was really plaguing Ethereum for a while until its recent very dramatic turn in price? And that was, it's the layer 2s that are collecting all the fees. The layer 1 is, really being disadvantaged. The network activity is falling, giving way to the layer 2s. So just to help people understand, I think it was a real question when Ether was falling relative to Bitcoin dramatically, and no one wanted to bet on it, even though these institutions were basically signing on to Ethereum. To me, it was such a big disconnect. But so now we have the term, but what about that issue?
Yeah, we have to think of Ethereum as the monetary base and the standard. So let's say I'm being really theoretical, in a quote world where the L2s pay 0 gas fees, to the L1, which is not true. Mm-hmm. The fact that Ethereum is the monetary base would actually accrue value to it. It's the same reason someone's saying, hey, look, we trade stocks all day and it's quoted in dollars, but we don't pay the US dollar system to exist. We'd be right. The fact that NVIDIA trades in the US helps the dollar. So that's why even if there was no exchange between the two, it accrues value. But of course, we know that they're trying to fix that. And so L2s want to support L1s. And of course, in the future, any bank that is going to be building on the future of Ethereum is going to be staking Ethereum as well.
Yes. And I think the more layer 2s that evolve, the more important the underlying becomes, right?
10%. Is actually still an acceptable level, because if you think about even in any competitive world, if someone has 10% of a system, they aren't in control of it. There's, I don't know if you remember the Herschel-Hurtendel HHI index. And if you run that calculation, especially with 70 DATs, and then in DeFi, it's not a concentrated market. It would still be considered highly competitive. So I think up to 12 million Ethereum tokens isn't crowding, and that's double Bitmine's target. Besides Bitmine, however, as you know, other crypto treasuries have not even been able to secure 1% of ETH, and part of it is that you need the public to provide you the trust through the velocity and trading volume of the stock in order to get there. So I think that there isn't going to be DATs controlling 50% of the Ethereum network. I think that 2025 is showing you that DATs are coming into existence really because the foundation and the crypto community actually need them. But going back to Cathie's question about like why 2025 for Ethereum, the Bitcoin and MicroStrategy's 2020 pivot made a lot of sense because Bitcoin was only 11,000 at that time. And he represented the sole way to get exposure to Bitcoin for any institutional equity manager.
Well, except for GBTC, right? Because we were in GBTC.
Yes, but for a firm like Capital Research or T. Rowe, they're unable to buy a closed-end fund or an ETF or directly own crypto because their mandates require them to own a corporate equity.
I see. So
Overstock was probably the only way someone could buy Bitcoin in the past. And then MicroStrategy came along. So MicroStrategy is almost 2.0 as Bitcoin Treasury. What he's done successfully, of course, is really to upscale it so rapidly because he went from having $2 of Bitcoin per share to over $250 per Bitcoin share, per MicroStrategy share today. So he has created enormous shareholder returns because the security business, of course, has continued to really muddle along at basically zero growth. In Ethereum, I think the moment is really this year because this is the year that Wall Street and governmental regulations became friendly to think about rebuilding on the blockchain. And part one, of course, was the stablecoins, and stablecoins have really been the breakout hit in crypto. We coined it as the ChatGPT moment for crypto because it has become a breakout product and it has created two enormous companies, one being Circle, which I know ARK was an anchor investor in the IPO, and the other is Tether. Tether today is raising money at a $500 billion valuation and roughly 300 employees. That's about $1.7 billion of market value per employee.
Tom Lee concludes with a striking observation. Just as 2020 was the year of Bitcoin's institutional awakening, 2025 could mark Ethereum's institutional breakthrough. When MicroStrategy pivoted into Bitcoin in 2020, it was the only accessible on-ramp for institutions to gain crypto exposure through a corporate equity. Now, Ethereum is about to experience a similar moment, but on a much larger scale. With stablecoins, tokenized assets, and regulatory clarity improving, Wall Street is finally ready to build on blockchain, not just speculate on it. Tom even calls stablecoins the ChatGPT moment for crypto because they've proven the real-world utility of blockchain technology.